Now, the Kenya Bankers Association, an umbrella body for the banking industry, have called upon Parliament to review the legislation on capping of interest rate, saying it did not serve its intended purpose because banks are investing in government securities as opposed to lending to the private sector. Now, we are joined by the MP who proposed this legislation, Kiambu Member of Parliament, Jude Njomo. Thank you for joining us, sir. So when you first proposed the capping of interest rates, your intention appeared to have been easy access to credit by the small and medium enterprises and even the private sector. Did you think you've achieved this purpose so far?
As far as those members of public and SMEs who already had loans are concerned, it was successful and it is doing very well. But the banks have done exactly what they promised to do, that if we are going to cap the interest rates, if we are going to limit their profitability, if we are going to be a hindrance for them to make the super profits that they have always enjoyed, then they are going to freeze credit to wananchi so that we can review the position. As far as I'm concerned, this is blackmail, this is economic sabotage, and the government should take stern action on that.
President Uhuru Kenyatta in the State of the Nation address raised concern on the lending to the private sector. Do you think it is time to remove the capping of interest rates?
After a new president was elected, I believe it was in Brazil, and he tried to persuade the banks to lower their interest rates, and she was not successful. She did an executive order and ordered all government institutions to bank with government banks. And then she ordered the government banks to lower their interest rates. And every other bank, because now the government banks had the biggest share of the money, they had to lower their interest rates. That is something we can learn from. There are several government banks here in the country, and I know there is a member who is already working on a bill whereby the government will be required to bank with institutions where it has shareholding, where it is an owner of those institutions. Otherwise, these institutions that are lending to the government, most of the money that they are lending to the government belongs to the government. So the government can take a stern action, and that can reverse this process. Secondly, the government can make it easier for me and Wanjiku to invest in government directly without going through the banks, by making it easier for public to buy government stocks directly from the stock exchange or from the central bank.
You've said that the government needs to take a stern action. How can the government then take a stern action against the banks?
One of the reasons that they are very bold, that they are not considerate, is because they are lending a lot of money to the government. And one of the ways of reversing this process is by government reducing its borrowing from the banks. Because if they have the money and it's not being borrowed, they'll have to look for a cheaper way to have the money borrowed. So that is one of the ways that can be done. Secondly, this law was passed by Parliament because it is the National Assembly mandate to make rules. There is no way the banks will have the rules changed without having them come to the National Assembly. It is not going to happen. They have to bring their proposals to Parliament for them to be considered. I don't see who will accept to vote for that kind of motion. It's going to be very, very difficult, because members have seen how the people have suffered from the banks, and they would not take our Wanjiku back there. Secondly, they are saying they have reduced profitability because they have been used to the super profits that they have been enjoying for a long time. Now, they're just coming to a region or to a domain which looks normal to any other businesses. And what I would say is to welcome them there, because that is how other struggling people are getting their profit in the country. That is the kind of profit that other companies are making. So they should not expect that they are going to continuously reap from the public, and the public cannot be able to survive because they are not making any profit.
The banks that have so far announced their results have shown increase in investment in government securities, and of course this is considered risk averse. Do you think that the government is crowding out the private sector, and what can be done in that case?
It may be difficult to cap the borrowing of banks from local banks, but as Parliament we can encourage the government to reduce its borrowing, local borrowing, and maybe look for more funding outside. It may be very, very difficult to limit. What was the second part of your question?
Ideally, they're still making the huge profit that they were making.
Oh, I may not be really qualified to comment on that. I have not had time to study all the reports that they have filed. But the 2 or 3 reports that I have seen, I think one of the banks had maintained its profitability. The other one had a slight reduction, I think of about 5%, you know. And if you look at it entirely, it may not be as a result of capping. There could be other factors that are causing the reduction in profitability. But of course, we expect a bit of reduction in profitability because also interest went down. But I think the profits they are making are a good profit compared to the investment that they have done. It's value for the investment.
From reports we've seen so far, there is no much increase of depositors putting their money in the banks and depositing their money with the banks, even after the incentive of 7% interest earning on the deposits. What can be done in this case? And do you think that the capping of rates or increasing the rates for depositors has served its purpose?
Most of these depositors are members of the public. You don't expect them all of a sudden to get money which they'll go and bank. So if there will be an increase, it is going to be a gradual increase. There may be a sharp increase in the number of borrowers as a result of reduction of interest rates. But I don't expect a sharp rise in the number of depositors because you need to earn for you to be able to deposit.
Despite the drop in profits by some of the banks, they have maintained or increased their dividend payout. Does this translate into anything?
As far as I am concerned, the banks were so comfortable, they was making so good profit, they forgot to be innovative. They don't come out with products. If you go to the first world, where they charge 1%, 2% per annum on their loans, they have very beautiful products that they sell to their products. In Kenya, we just don't have any innovation in banks. They just want to have one system working, and that is high interest rates, nothing else.
Generally, looking at the capping of interest rates, do you think your bill has served the purpose, the intended purpose, looking back for the very few months?
It may not have served its purpose per se as far as new customers or new applicants for loans are concerned, simply because the banks have continued in their cartel-like method of squeezing as much profit from the public as possible. But if it were to be left for free market, where the market forces now will determine, and the cartel-like activities are cut down, this would benefit our people. I believe that would do. But remember, this is not the first time this has happened. A couple of years ago, banks just came with new regulations that if you want to remain as a customer of that bank, you must have a certain amount of deposit. And it was not a small amount of deposit. I remember in my particular bank where I was banking, I was required to have a minimum deposit balance of 20,000 in my simple savings account. And customers started moving out of that bank. And a small growing bank came in and filled that void, welcomed all those who were being chucked out of those other big banks. And that sorted out the problem. I am seeing a similar situation here, that the banks are resisting, the banks are mistreating their customers, the banks are blackmailing us, the banks are exercising what I could call economic sabotage. So an institution or several institutions which are patriotic and have Kenya in heart will come into play, and they will fill the void that these banks are leaving.
The drop in profits for the banks have in a way led to increased laying off of staff by the bankers. Does this worry you, or what does this mean for the economy, general economy of the country?
As far as laying off people is concerned, capping of interest rates had nothing to do with it. the banks were preparing themselves to lay off people. Look at many banks. They have automated their systems. They did not automate because of interest rates. They had started the process long before. If you are doing salaries today and you're in a good bank, you just go to your online banking and you'll be able to pay all your staff salaries online. Before, you would go to the bank, give them an Excel list of all your staff, and they do that. So who is doing it now? The person who was doing it at the bank is laid off, and you do it from the comfort of your office. If I want today to withdraw money now from my account and put it in my phone, I don't need to move from this seat. I'll do it from the comfort of my seat. So what happens to the teller who was supposed to serve me? He or she will be asked to go home. So the banks were planning to do these things. They have fully automated many of their services, and they no longer need all those members of staff.
Capping of rates led to the banks, of course, taking a seat back and, of course, looking back at whom they would lend to, avoiding people with riskier profiles. This has led, they say, to Shylocks and unregulated sector churning out more loans than even the official and regulated banks. What is your take on this specific question?
An alarmist kind of statement. And we cannot talk about an illegality here because the Shylocks are illegal. The most important thing here is they are causing a credit squeeze. They are refusing to provide credit to Mwananchi and to the small business person, so that it will be seen like there is a crisis as a result of the new law, and they would like that law to be revised. That is blackmail. That is total blackmail, and it is not going to be acceptable to any Kenyan, least of all to the Kenya National Assembly. I would like to ask the banks to be realistic, to be patriotic, and to have the interest of Kenyan at heart.
Thanks for speaking with us. That was Jude Njomo, the Member of Parliament for Kiambu constituency, who proposed the capping of interest rates, saying that the banks should be patriotic enough and lend to the small and medium enterprises, including the private sector. He says the banks, of course, should not commit economic sabotage, and that was top in business. I am Hudayfa Aden.